Lululemon just reported earnings and the stock dropped 22%, taking the company's market value down to $31 billion. With $1.3 billion of cash on its balance sheet and no debt, the enterprise value is $29.6 billion. Meanwhile, Lululemon has reported $10.8 billion of revenue over the last 12 months, $1.8 billion of net income and $1.3 billion of free cash flow, which means the stock is now valued at 17 times earnings. That's the cheapest valuation the company has seen since 2009. Lululemon sells high-end yoga pants, and the company has benefited from the rise in athletic leisure. But after years of double-digit growth, the company is starting to slow down. Revenue growth in the first quarter was 7%, and management said full-year growth would be between 5 and 7%. More concerning, however, are the company's comparable sales. Comparable sales measure the change in revenue without the impact of new store openings. In China, the number has fallen sharply from 26% last year to 8% in Q1, while in the Americas, comparable sales actually decreased by 2%. These are worrying signs for Lululemon investors because they suggest the company's products are losing their appeal among shoppers. That's despite Lululemon doing its best to innovate with new fabrics. Of course, external factors are also playing a part. Management said that macro uncertainty has led to a drop in foot traffic and consumer spending, and tariffs were mentioned 30 times on the company earnings call. Those tariffs are leading to higher corporate spending as the company adjusts its business and lower profit margins, and they may also be affecting Lululemon's plans for expansion. The company was hoping to open 40 to 45 new stores this year, but they've only managed to open 3 stores in the first 3 months. That puts a question mark on the company's growth outlook. Of course, a lot of bad news is already priced in. A simple discounted cash flow model that assumes 8% annual revenue growth for 10 years with 13% free cash flow margins works out to an annualized expected return of around 9% a year. That suggests the stock is at least getting interesting. But with next quarter likely to be even worse for Lululemon, now may not be the best time to buy shares. But these are my personal opinions, not financial advice, and I hold no position in Lululemon stock. For more investing ideas, make sure to join my newsletter at 3minutebreakdowns.com. Thank you for watching.